Hi, this is Shane with The Rational Trader. It is August 11th, and we're going to take a look at the last 2 weeks of activity since we implemented the change in the way that we analyze or the simulations looking for the high probability trades. So it's just over $1,000 in 2 weeks. And you'll notice there's 10 trading days in 2 weeks. But we only took trades on 7 of those days. Big gain, healthy gain. And the other 3s are small losses, and that loss is I wouldn't call that a big loss either. We'll never see a big loss, actually, just the way the system is built. But it's not unusual to see these minus 70, minus 30 kind of days. This is what we saw prior to the change a couple weeks ago. Was we were just sort of treading water. Much of these little small loss days and the occasional nice day that would make up for it. And it's the reason that I did the research and the analysis and I wrote the code to change the way that we look at the simulation to analyze what behaviors are high probability and show some amount of repeatability. I'm making a change here, or rather, I'm testing a change in the live market starting on Monday, and I'm providing sort of what we've been doing and what I'm testing to members so they can follow along if they want. But let's look at these individual markets here first, and then we'll talk about what that change is. So let's start with the yen, because I think this is the one that was the most surprising. So 6JU9. So all symbols non-sim. So this is a live account. 6JU9. Okay, so we had this really big day here, and it was get into the market, do an ad, and the market keeps running, and then you end up hitting the target. In fact, the market continued to go. I actually got. I would say I got taken out early, but I didn't. I hit my target, which is I think it's 50 ticks. Trade window. Yeah, the target's 50 ticks in the yen, but it just continued to blast. I didn't get another signal, which is unfortunate, but. One of those days where in the currencies where it takes off and just keeps going. It's why we have the auto add capability built in. And then a small loss and nothing, and then a small loss. So plus 493. So just under half of that gain is this market. Only 4 days where we took trades in the 10. Okay. Now let's look at the euro. 6EU9. Euro's up 268. Also, I didn't do this on the yen, but notice the number of trades, this column here. So this number, we want this number low. We're looking for a small number of trades with the smallest number of trades with the highest profit is what we're after. You can see here we scratched on these 2 days, right? We got to first target, move the stop to entry +1. And then you're trying to cover commissions, though I don't think 625 actually covers it these days. Big day there, small loss day there, nothing there. Let's see, gold, GCZ9. So plus 290. In fact, I wonder, did we have some trades in the M9? No. All right. So this lack of activity in a market that's moving is kind of one of the things that got me thinking about changing what I was doing, or led me down the path to where I went. CL U9, similar. So this is down 30. Again, just 3 days we took trades over 2 weeks, and so those gold and oil were the two that got me thinking. Let's go look at this. So I did a bunch of analysis and work, and what I'm live testing starting tomorrow is a look at the analysis that is more weighted towards what's happened recently than necessarily repeatability over a longer period of time. All right, so it's trying to capture the current market behavior. All right, and so if you go back to the most recent video, there's a lot of details on what's actually going on here. But so we put out these sheets that show behaviors. They're in the brackets, and sort of how many trades a day you could expect to get based upon the simulation, and then what is the quality of that trade. This third number is basically ticks per trade. I want that 10 or above, basically. And so this was CL, and over that 2 weeks, it was basically these eight behaviors looking for 4 long and 4 short. Didn't really show up very much. All right, and so it's the same thing with gold. If you look at gold, it's very few behaviors actually at all, just 2 longs and 1 short, and they weren't showing up. And yet the markets were moving a fair amount. So that got me thinking about taking what I've done here and then refining it further to weight the more recent activity. So that's what I'll be live testing. You'll notice here that in this simulation there's 94 days are what's being analyzed. So what I'm doing now, or rather what I'm testing in the live market, is just the last 5 weeks, 25 days. All right, and so there's a different set of codes here. This is instructions to the members. A different set of codes here that are weighted more towards what's been happening recently, as opposed to what we've seen over the last 94 trading days. That has some risks in that it's one of the key features that we're interested in is repeatability, and we're sort of giving up that in some ways. It's been refined to the point where I think it's a little bit it's less risky, though you have to consider what I'm live testing to be riskier. So if you're a member listening to this, you have to recognize that our test cycles now require live market action, which means it's not quick. I make a change and then I got to actually run it in the live market for a couple of weeks to see how well does it work. And you can't draw conclusions even from a couple of weeks. It just sort of tells you if you're on the right path or not. And so I'll be live testing this now. And there's something else in here which I'll have to cover in another video, which is I've been doing a lot of work analyzing what's known as model variation. So as we train a model, how much does it change from the previous model? And more importantly, how much of that change is applicable to what we're doing right now, what's happening in the market today. And one of the dilemmas with using machine learning is that it's really good at certain things, and those things are primarily centered around understanding the boundary conditions, which is the rules of the game are well understood, including the win condition, what represents a win or a loss, and something called perfect visibility. Perfect visibility is probably the most important here, in that what it means is that all participants can see the state of the board of the game with perfect visibility at all times. So everybody can see everything all the time. And that's not the case in trading. And so this is where we get into having to deal with probabilities. And we're taking that approach to machine learning and applying it to trading, understanding that we don't have perfect visibility. And we're looking for high probability conditions. And one of the things to deal with is how much does the model change as you train it. How often do you need to train it? Do I need data through last Friday to start trading on this Monday, or is it better to put a stake in the ground and use a model that is understood and analyzed, and from that you've made decisions on what you're going to trade, that kind of variation is what I'm describing here, or what I've been researching. So again, that needs a much more in-depth video, which we'll have to cover another day. In the meantime, certainly the current change is been positive here, plus 1,000 over the last 2 weeks, and then we'll see now over the next couple of weeks what this weighting of more current market action does to the results. Okay, that's it for today. Take care.